Sloan,
How we doing, Pat?
good to see you again.
Nice to see you as well.
We are here again, back with the Pauhana podcast. What episode again?
It's 9.
Episode 9. Episode 9.
It's 9.
And we're really excited today. We've got a very honorable guest, Hawaii's top lender, Brady Spangler. Good to have you with us, bud.
Appreciate it, gentlemen. It's always good to, chat with some top agents and, kind of go over current market stuff and educate those watching and listening and, just kind of spread the wealth of knowledge.
Absolutely.
You know?
And no one, we can definitely testify to this. Brady is a absolute wealth of knowledge in the lending arena. As we said, Hawaii's top mortgage broker.
Number one.
We've done a lot of deals over the years. He's also licensed in almost every state in the country. 49, I was just informed. Utah's holding out on him, but he'll get in there soon.
Goals.
So yeah,
I got one more.
If you need need a loan in pretty much any state in the country, this guy's your guy. He's work ethic second to none. His team is amazing. They get deals done, and I think with all the chatter in today's economy, or today's world about mortgage rates, what's going on, Fed rates, 10-year, this and that. We just wanted to have you on, shed some light on, what is actually going on right now with rates, help guide our clients and other clients out there on how to make, informed decisions. Should they buy? What should they be asking when they buy? What are rates going to be doing? All that good stuff, right?
Absolutely. Yeah, we're kind of in a crazy market, crazy world, crazy times. What I always like to kind of start with, all my agents and even my clients is really just kind of the belief around power positivity. I don't know how many people, agents, clients you talk to on a daily basis, and their first minute or two of the call is like, rates are terrible, the market is the most challenging market ever, and no deals are happening. So, that negativity feeds itself, and the more you hear it, the more you say it, the more you believe it. So,
For sure.
Really, we don't like to deal with negativity. We don't like dealing with, people that are assholes. It's like we like to surround ourselves with the, positive people
For sure.
that want to get deals done. We're all playing on the same field. We're playing with the same rules. You got to figure out a way to make it happen and make it work, or those people are just going to be on the sidelines for the duration. The market rates. Man, I get one of our top guys at our company's top in the nation, Sean Benosian, a really good friend of mine.
And what company? We actually didn't mention your company.
Yeah,
What is your company?
Everybody knows this is Guaranteed Rate, but we actually rebranded a couple months ago to Rate. Because everybody tries to spell guaranteed. The email is easy.
It's true.
It's my name at Rate, which is awesome. So
that is good.
But yeah, we're second largest mortgage banker in the U.S. now, and our CEO is just innovative, state of the art. The technology and some of the AI stuff we have, and even the programs, is mind blowing to, set us up to win.
Oh yeah.
But I think everybody talks about rate, and for the longest time we had the Fed cut.
Yeah.
First in a while back in September, and that day everybody called, rates drop. Well, you guys are 30 days late to the party. So, the bond traders built that into the market, 25, 30 days ahead of it actually happening.
Yep.
For those of you who don't know, the Fed cut is the Fed funds rate, which is the rate at which banks borrow money overnight, okay? It's indirectly tied to mortgages, but mortgages are more directly tied to the 10-year treasury.
Right.
The Fed funds rate more affects like auto loans, insurance, stuff like savings accounts, stuff like that in the short term. So what's quite crazy is that rates have jumped 0.75 of a point in rate since the Fed cut.
Yeah.
So rates dropped before the cut. People didn't really know that. Rates were super aggressive.
We were hammered. We were telling everyone when we saw that drop. We were seeing rates like in the high fives there before the Fed cut, and we're like, jump on this. And some people did, and they're glad they did.
And a lot of people
are waiting.
greedy. Yeah,
They're like,
I
"Oh,
wanna-
like, oh,
yeah.
I need the
all
fours.
these people that
It's gonna
I could have
keep going
refied,
down.
and they're
Yeah.
like, okay, I'm ready. I'm going to wait. And then they
Yeah.
call you 5 days later. I mean, 2 Thursdays ago, maybe even 3, we got a super strong employment number,
Yeah.
which
Yep.
always screws, rates
yeah, yeah.
wise.
Yep.
And the last employment revision a couple months ago was they revised it down by over 800,000 jobs. So,
Yeah.
I mean, I think true data takes time to come out.
Right.
We have inflationary concerns coming out,
Yep.
strong consumer spending, which is what they highlight, but they don't highlight that we have the highest debt as consumers in the
Right.
last 25
Yeah,
years.
yeah.
So it's like everybody's
Debt
borrowing,
ratios are up.
so
Yeah,
it kind
yeah.
of looks that way. But getting back to the rates, the rates have jumped up drastically.
Yeah.
And, the Fed funds rate, it's, over time, rates will come down. All the bond analysts are thinking we're going to see a downward trend over the next 12 to 48 months.
Yeah.
And what we're always telling clients and educating clients now is we have so many clients that are wanting to wait. And it's like you have, historically speaking right now, rates aren't terrible. We're locking VA rates. We locked a VA jumbo yesterday at 5.75. That's a VA on a jumbo.
Yeah, so that's good.
An investment property we locked in Indiana yesterday at 6.99. These are investment properties.
Yeah.
And then a 7.125 in Louisiana. So in the grand scheme of things, rates are still good, but those are the people that want to wait are just going to miss out in the sense that you can buy now and target the refis over the next 12 to 48 months as rates drop. The competition now, depending on your price point and depending on market,
Right.
is still pretty fierce. The single family home under 1.5 in Maui.
Oh, yeah.
Everybody
It's-
needs to buy a single
That's right,
family.
that's
It's
right.
like, so you can wait as prices continue. I think you said the median, we keep breaking the median.
Yeah. Month
Every
over
month.
month, values are going up, right? Year to date, values are up pretty healthy. We're talking over 10%. So, everyone on this, on your, to unpack that a little bit, we're getting the same chatter, right? Everyone's like, oh, I want to wait for the market to soften. I want to wait for values to come down. We've been doing this a long time. People have been telling us this since 2015. I'm waiting for the crash. But, if our market is as active as it is right now, just imagine what it's going to be when rates drop down into the fives.
Competition.
So if you're waiting for that point better on your rate, which absolutely affects your monthly, right? You're going to be competing against such a way stronger buyer pool. Values are probably going to be higher. And you were telling me a story earlier that was interesting.
Yeah.
The guy that waited
Yeah,
on
we had
price.
a guy. Yeah, we had a guy that was going back and forth on a deal, and the counter came in at let's just call it 985.
Okay.
And this was two weeks or so before. Bonds have been getting hammered for the last 2.5, 3 weeks.
Yeah.
But he sat on that counter. He's like, just not going to do it. So he got in last week
Right.
at a 950 loan amount with a much higher payment because rates have now bounced back.
Yeah.
So timing is everything, right? But
sure.
you have to educate the buyers and agents out there. You might pay a little higher monthly for 12 months,
Right.
but in the grand scheme of things, if you get the house you want
sure.
without 50 offers
Yeah.
and escalation, not
Right,
nonstop,
right.
that's huge.
Yeah.
And to talk about real brief point
Yeah.
on the crash,
Right.
dude, back in 08 and 09, Sloan, if you had an ink pen, bro, and your hair is amazing, you could get whatever you wanted.
Yeah.
Nowadays, we validate every single thing.
The underwriting
whether
is-
it's income, assets, employment history, housing. Everything is beyond validated.
Right.
Yeah.
So not to say that there's not a huge event worldwide or something that would create that, but it's not going to be a housing loan crisis that we were looking at in 08 and 09.
For
And people
sure.
are kind of waiting for this, mysterious thing to happen,
yeah,
but
this
it's more they're
crash
feeding
that-
themselves of
Yeah, yeah.
why don't I want to buy now? And it's this excuse. But, we're
Yeah.
lately, the clients that we just recorded.
Oh, yeah.
Yeah.
Julia and Chris, great people, great clients. Brady did a phenomenal job for them. But, they were kind of running through those same pros and cons, right? Like, oh, value versus rate. What's the monthly? I mean, I don't know how many times Brady sent them an updated statement on where their loan
payment,
would the breakdown. They're like where the monthly is.
Yeah.
But it was super helpful, and it got them to realize like, okay, let's budget. We're locking in this rate. We'll 12 months. We can only if the rates go down, we'll be able to refi.
Yeah.
And we'll adjust that down. But we were able to find a property in today's market that wasn't the hottest property. Needed some renovation. Kitchen wasn't great. It was 70s appliances and needs a refresh.
There's no competition.
Yeah,
so
but we got $400K off on that thing.
Yeah.
So we got a huge discount. Their net monthly, if you look at that versus that property, let's say they wait 12 months, property will probably be closer to, 1.7, 400, 500 grand more. And the rate, let's say the rate's a point less. Look at that monthly payment, So it makes sense if you really break down the numbers.
It's a temporary problem, the rate.
Yeah.
And the more that people understand that, it seems like the more successful they're able to be in this market.
Yeah. No, absolutely.
Well, it goes back to being positive. Like, people are going to sit there and make excuses.
Oh, yeah.
And that's the easy way. Like, oh, we're just going to wait. We're going to wait. Oh, it's the rates are too high, this or that. They're going to be renters, they're going to miss out on certain opportunities. It's like, you don't want to force people into anything because
Correct.
It's not buying a car. It's not buying a pair of shoes.
Yeah.
But if you educate your clients, the trust is huge.
For sure.
And their success rate is huge because they understand the game. You don't want them to become lending experts. You don't want them to become real estate experts.
No, yeah.
But the better educated and the better the team you surround yourself with,
For sure.
the more times you're going to win.
Yeah, absolutely. And I mean, we're seeing that too. I mean, the positivity thing is huge because you talk to a lot of brokers in this market. It's hard, right? It's been challenging, especially in mortgages. Rates went up, volumes went down. Same in sales, right? Less deals, but we're still doing deals.
Oh, yeah.
Like, you're still doing deals. There's still transactions happening, but everyone's complaining about how there's no deals. So it's like, they're there. You just got to work for it and you got to find them. And our market's more difficult than 2022 or post-COVID when things were nuts. Yeah, but there's still business being done. And, you just got to get out there and get it done and do the work, and just complaining about things doesn't get anyone.
It's a waste of time.
Yeah.
No one cares but your mother. They really don't.
Yeah.
And that's the only person I found in my life that will actually listen to me complain.
Not your wife. Your wife
No,
doesn't
she
care
does
either.
not care.
No. Yeah. So it's just it's a good note that you just gotta keep your head up, keep grinding, and I really want to dive into kind of the rates have been so volatile and no one's been able to predict anything really, right? Everyone's like, oh, they're going up, they're going down. They're kind of all over the place. Where do you think, and I know this is crystal ball questions, so I'm really putting you on the spot here, but how do we think things are going to look the next 3, 6, 12 months?
So right now we're basically, the future market's pricing in 2 more 25 basis point cuts.
Right.
November and December. 1.5 of that's already priced into the market.
Okay.
But beyond, I was just listening to our head of capital markets. The capital markets division in our company is, we were the first company to securitize the jumbo securitization on the secondary market, and we've just done our second tranche of them. The amount of money and stuff they have and the pulse they have on the market is monumental.
Yeah.
They clearly said after the end of this year, nobody knows. It's kind of it's a guessing game. Nobody knows right now because it's just so uncertainty. China's coming out cutting, basically, increasing stimulus, which is inflationary over time.
Right.
And you have all this geopolitical worldwide stuff going on that nobody really knows. But we're talking, at first when we were before this Fed cut in September, we were like 150, maybe 200 basis points. Well, now we're looking at 225 basis point cuts. So overall, we should see a trending downwards in the next
Yeah.
12 to 48 months, but it's going to be choppy as can be.
Yeah.
And, that's the whole thing of so
can see
many
that.
people have like this target rate in mind. Well, I mean, it's tough because when inventory is low and you got to time a target rate, you kind of got to give on one
Yeah.
side of it. And
Right.
it's like, we know that you can't really change the house.
Yeah.
In 12 months you could, but there's, your carrying costs and whatnot. But you can change this rate over here, this variable called the rate.
Yeah.
So it's, and you target no cost refis on the way down. Educate your client. We have proprietary software that's going to do that. They're protected. If it goes up, they're locked in. And as they go down, we're going to take advantage of the savings.
Yeah.
So, I mean,
Let's dive into, let's touch on that quick.
I like
So
that.
what is
Yeah.
that?
Yeah.
So you have a no cost.
well, so
Refi,
yeah,
float
everybody's
down
like,
kinda deal?
oh, you're guaranteeing a no cut. Any lender that offers rebate pricing
Okay.
can do no cost refis. The reason 3 to 4 or 5 years ago we didn't talk about no cost refis because we were in the twos. Like,
Yeah.
we're never
People
gonna
weren't doing
we're
them.
never
Yeah,
gonna
yeah,
hit
yeah.
that ever again.
Yeah.
So,
Yeah.
what a no cost. I mean, I get paid no matter what the rate is. Just think: the higher the rate, the higher the rebate. The lower the rate, the higher the cost.
Right.
So if we know that, and nobody has a crystal ball, right? Everybody's like,
Yeah.
well, what if the rates don't go down? Well,
Then they don't.
I can't. Yeah,
Yeah.
they don't. But looking at all of our expert bond analysis and our secondary capital markets, all that, we should see them come down 12 to 48 months.
Yeah.
If I refi you 3 times in the next 4 years and I charge you 15 grand each time, you're like, that sucks, right?
Yeah.
You're like, who would do that?
Yeah.
Because
Yeah.
there's going to be a break even and we don't hit the break even. It's kind of like paying points in today's market. If you can avoid points at all costs, there are certain programs you can't avoid points.
Right.
But if you can avoid points, which I call essentially a carrying cost,
Right.
Sure.
is if we buy, we pay a point and a half on the rate and then I refinance you in 10 months.
Exactly.
That's gone.
You're losing.
Yep,
Yeah.
yep.
You're
So
losing money.
essentially, we target a no cost refi in the sense that, let's just say, I had a condo, I could save the lady $850, right? She goes from 7,875 down to 6.5.
Yeah.
All right. Well, I could really give her 6 1/8, a lower rate, but she's got to pay all the fees.
Yeah.
Right. So I could give her another 3/8 lower in fees or in rate, but I got to charge her the fees.
Yeah.
Yes.
I pay all of her fees at six
So
and
you
a half.
roll
She
it
saves
all
a shit
in.
ton of, sorry,
Capital.
she saves a
Yeah,
lot
yeah.
of money.
Yeah,
And then there's no break even.
Yeah.
It's like, so what we do with our clients is, what's your target rate? What's your target savings? Once that becomes available, we're going to reach out.
Yeah.
If I do a no cost refi over the next, 2 or 3 of them over the next 5 years,
Yeah.
why wouldn't you do that?
Yeah.
If the savings make sense.
Yeah,
Obviously,
absolutely.
sometimes 500 to you is nothing. 250 to you could be everything.
Yeah.
But that's how we target it. And
Yeah.
a lot of people don't, anybody can structure it that way. It's just doing the volume we do and knowing what we know. We're looking out for our client's best interest. And we educate, we tell the client, listen, you might see lower rates out there. I can give you a lower rate and charge you the fees.
Right.
Or do you want to just keep doing this as we go down?
Yeah.
So, and we, as I was mentioning, our CEO and our technology, I mean,
Yeah.
we could talk for 10 hours on it, but,
Right,
we have software that essentially monitors all this. Equity, principal buy down, market movement. I mean, we have software. I can look at every transaction you've done,
Right,
what
right.
lender you use, what loan. I can look at every loan officer in the U.S., what realtor he used, buy side, sell side, what title. I mean, we have all that data,
Yeah.
right? You can get lost in it.
Right.
But it's just about being informed, setting your clients up for success.
For sure.
And for a lot of these people, over the last 6 months, if you educate them on this, they're not going to sit back and wait.
Yeah, they're going to see the value and do it.
It's like, okay, well, yeah, the rate's a little bit higher, but I'm going to pay a little bit higher for 12 months and know that we're going to take advantage as it goes down.
Okay.
So
yeah, makes
that's
sense.
kind of and I've heard, I heard you're guaranteeing a no. It's like, it's, and then you got to explain it to people, right? Because
yeah.
if you don't explain it, you're like, how
Yeah.
in the hell is it a no cost?
Right.
That's
Yeah.
a no cost, So those are just some of the tricks that we
Yeah.
utilize to save people money on the way down without crushing them with, closing costs.
Right.
Makes
So-
sense. Makes sense.
And that's one other thing I wanted to talk about when we get to about rates.
Yeah.
I don't know. You guys probably get asked it. I'm a lender. I get asked it 5 to 10 times a day.
Yeah.
What's your rate? What's your rate? Text. What's your rate? What's your rate? What's your rate? I mean, Sean put out this
I know
Instagram
you were
video,
one of-
which is
yeah.
like just it was the most perfect analogy I've ever seen. Because essentially when somebody asks me that, I'm like, dude, I don't know. I don't know what your rate is.
It depends.
It's your rate.
Yeah.
I've got over 100 different investors. I don't have a one size fits all, but Sean's analogy is you walk into the doctor's office and you're like, Doc, give me a prescription.
Yeah.
Doc looks at you like, okay, what else? You give him no other data points. How does he help you? He can't.
He can't.
So every rate is specific to every individual buyer, client, property, FICO, income, loan amount. I mean, the list goes on and on. So we don't publish rate sheets. A lot of local, lenders
like
and whatnot, they publish these rate sheets that, one, in the fine print have 2 or 3 points associated with. 2, the odds of that client seeing that rate and fitting in those exact criteria are slim to none.
Right.
I'd much rather, instead of somebody seeing a rate on my website or a sheet I posted, then they come to me and do a loan app, and I'm like, well, your rate's 3/4 of a point higher. Why? You're already ripping me off? Much rather get them a customized, and this is why we don't do rates on open house flyers.
Yeah.
1, the market moves way too much.
Right.
2,
especially right now.
every person that comes into that open house, has a different scenario. And 3, you hand them a flyer, you're never going to see them again. Hey, let me get your info. Let me get your specific, let's get you a customized quote from one of my top lenders.
Yeah.
Now you're giving them real data. They trust you. They get into the deal. You're quoting them real accurate numbers and not like, oh, you guys referred me to this lender and you quoted this on the sheet. And then now we're here.
Yeah,
the market moves too drastically and there's too many compensating factors. So education is
makes sense.
more important than ever. And that's why it's hard. I mean, I have a hotkey typed up that if somebody asked me what the rate is, I said, please provide, the following. Because you have to customize. And then it's like, well, a condo, is it a long-term building or a short-term? And we could get into the insurance on condos and deferred, for on and on. So at the end of the day, surround yourself with good, solid team. Legend agents like yourself, good bankers who you guys trust. The better you educate the client, the easier, happier it is, they'll come back. Like, Julie and Chris, she was like, dude, it's never been this easy to ever close a home loan. She's like, I've never seen it. I said,
smooth.
Well, that's what we strive.
And we came in, what was our offer? 25-day close.
25-day
super
close.
Super appealing.
Way ahead of schedule.
No, it all worked seamlessly. Sellers loved that, obviously. And it gave us more leverage to get the terms we wanted,
No,
so
how many deals in this market are coming in, 400 over? I mean, that's that's a testament.
Well
to,
below ask. No, it was good. I wanted to dive in a little bit on insurance. So I remember like the good old days where we would do a loan with you guys and be like, oh, here, I got a couple insurance quotes. It was like it was at the end of the deal, super easy. Just have your, clients review them, pick one, and it was so simple, right? Completely different world now.
Huge.
Right? I mean, in insurance pricing is a huge factor now for buyers, right? I mean.
Yeah, so there's 2 different facets to you've got condo master insurance, and then you have homeowners insurance.
Right.
January 1, 2024, for whatever reason, a couple carriers wanted to pull out. Everybody jacked their prices up astronomically.
10x, pretty much.
Now it's like some carriers that no carrier really cared about the roof age. I mean, it's like
now it's like
some care.
Yeah.
Some, you're going to need to get this bonus room permitted post-close. Well, you tell that to a first-time home buyer. Oh, hey, can I get your plumbing inspection? Can I get your electrical inspection? Like, there's so many things that are coming up now than they ever have, and they're just crossing their T's, dotting their I's. So twofold. I always tell, at the last presentation I gave, being a seller's agent, dude, you're getting a quote on that house. I don't care what agent you use, but you get a detailed hurricane and hazard quote. Because one,
have it ready.
I've had a client tell the seller's agent they couldn't buy the house until they had a new roof because the insurance lady said that. No, that wasn't the case. But the seller's agent didn't
have
do their
to back it
homework.
up.
She got a new roof. But knowing every pitfall or possible landmine up front, but then also buyers we're getting quotes before clients even get into contract.
Yeah.
Because if you got a client that's, borderline, they might not qualify, the debt to income ratio is tight.
DTI, that's right.
I mean, and you're looking at, oh God, the insurance is $800 a month. So you just really got to surround yourself with being proactive. We give out 2 quotes to everybody: local, strong, huge name, #1 carrier, and then a more not economical. It's just 2 different ways you look at it.
Yeah.
So insurance is key, and then especially if it's in a flood zone too.
Right. Oh yeah.
Come in if you don't know it's in a flood zone and the seller doesn't have a updated elevation cert.
Right.
You're either going to pay through the roof or you're going to pay through the roof with the cert.
Get the
To get the
cert.
certification,
Yeah.
So,
Yeah.
I mean, that is just doing your homework and
Yeah.
knowing what it's going to be.
Got to do it up front now. That's the big thing is like first thing, figure out your insurance, get at least a ballpark of where it's looking, your quote and everything.
And, some of these people might have previous claims, and they get a quote. It's like when somebody's like,
Yeah.
oh, I want the lowest rate
yeah.
around. Give me your VA rate, but you're not a vet.
Yeah.
It's like you get these people an insurance quote, and it's like, oh, he's had like 4 claims, like water claims that so we do all that up front.
Right.
It's like, hey, here's the birth date.
Yep,
fully vetted up front. If you're a seller's agent, dude, hey, as a seller's agent, I'm going to give you a quote. So 1, you arm your buyer, but 2, you guys might have to, kind of tidy up something that might be an insurance risk.
Yeah.
That it's much better to do it before you list than after you get the appraisal, and then now you've got a buyer's agent that's strong arming you because all this shit needs to be done.
Yeah.
right.
Yeah. No,
That's a
I
good
hear you.
point. Yeah.
And
Makes
the
sense.
condos, we could get into it, but the condos we are vetting, more than we ever have.
Well, oh yeah.
But our condo department is out of this world. I mean, we had Keonekai Villages was kind of funny. They had their insurance was all jacked up, and we had a client that wanted to refi. So I sent the insurance over to my boss. He called up the agent, worked with our condo team, and 2 days reworked that same policy, master policy, didn't take away any coverage, no more premiums, made it Fannie Freddie eligible.
Yeah.
Just because we knew what we're looking at.
Yeah.
But the hurricane deductibles,
Yep.
the sub limits, the ordinance A's. We could go on and on and on.
Right.
What I just recommend is I vet everything before I'm even sending a pre-approval letter out. Some
That's
agents
huge.
are like, let's just get it in there. I was like, if you can't finance a condo, it doesn't matter how good our offer is.
Why go through the motions if we can't do it? Yeah.
So a little more homework up front. We've always
Yeah.
prided myself on that.
For sure.
Listen, if I say we're going to do it, we're going to do it. A lot of people out there just, it's a tough market. Everybody's hungry. So people are bending the rules. They're not crossing their T's, dotting their I's.
Yeah.
And, they're trying to just do anything they can to get a deal and cutting corners. But at the end of the day, that all comes out.
Well, that's
at
the
some
thing.
point.
Nothing worse than
Yeah.
getting through a deal to the 10-yard line and the deal you can't do
Yeah.
it, right? Or so. We've all been there. It's and I've thankfully never been anywhere near that with you and your team because
Yeah.
you get it settled up front, you make sure you can do it, and then you get to closing. But
Or condo
crucial.
master renewals. I'm not going to jinx it, but we just got a renewal on a deal. We're in closing to close in 8 days, and there could be a possible insurance deductible issue. But we just got the renewal was 2 days ago, and they just issued. You're in the middle of the contract. You can't do any more homework up front because you don't
It's
know
happening.
what's going to happen.
Yeah.
But the good thing is we have investors for everything. But what people don't understand is the higher certain things in the condo, the lower amount of investors you have to choose from. So, and that diminishes your buyer pool.
Yeah,
So-
absolutely. Good stuff.
We can go on.
You're amazing.
We can
Wealth of knowledge.
go on and
You're
on.
amazing.
It's
No,
just
I got
yeah.
a couple fire round ones for
Yeah.
you, bud. We'll wrap up some of the things, the mysteries around mortgage brokers that everyone wants to know. I think a big one. When you close your loan, how long do you actually have to wait to refinance?
So let me just correct. Mortgage broker and mortgage
right.
banker.
Yes.
Okay.
Yes. Well,
so
so
the
that's gonna
difference
be-
in two. A banker.
That's gonna be a question too.
Yeah. So-
Working with a bank versus a broker.
Well, so I'm a
mortgage-
mortgage banker and
Yes.
I'm a mortgage broker too. Banker
Yes.
is you use your own funds, everything's
Yes.
in house, okay?
Yep.
Or you go to a bank. A broker is you're just kind of an independent third party and you're going to broker out to wholesale investors. Okay.
Yeah.
You have less control unless you do a massive amount of volume with them. Then you get to kind of push around.
Okay.
So there's no rule. It's called recapture, right? So, and every investor has a different recapture rule. And what that means is if a buyer comes to me with an agent and I try to educate him, hey, if you're going to pay this off in 4 months, I get screwed. Like I got to pay back. That's like you closing a house and making 2.5 or 3, whatever you guys make. And you got to pay that back 4 months after you close the house. So essentially that's what it is. We educate them and say, we're going to do your deal because I'm not going to screw the agent.
Right.
But just you educate them. And if a lot of the people are like, hey, we'll make 6 to 7 payments. Some it's only 120 days. There's no written rule.
It depends on the lender.
And it's not written. I mean, there's no rule. It's just we ask and we educate.
It's a common practice. Yeah.
Listen, if you pay this off right away, we get hit. I mean, we don't make any money. We got to pay everything, all the yield we made back on the deal.
Right.
If you can do that, that's great. Majority of the time, people listen to us. Sometimes people lie to us.
Right.
Yeah.
But that's, so there's no rule.
Got it.
You can pay it off whenever, unless, there's a prepayment penalty, which aren't really relevant in this market.
Pretty rare.
Some DSCR investor loans, it's back. But
Makes sense.
So there's no written rule. It's just we ask.
Yeah.
Please, no.
And usually it's like 6 to 12 months, something in that range.
It's usually
Or
ever
like
6
4
to 8 months.
Okay.
Yeah.
That's
and
good
we
to
have
know.
certain investors that are 120. I mean, we've got some exclusive relationships with huge private bankers, like the big houses, just because of our CEO's relationship. And, that's only a 4-year or a 4-month, they call them EPO, early payoff. Right. So.
And circling back to that broker versus banker. So all markets have this, right? You have kind of your lenders at the banks, which they usually have some good products, right? But we've all been with, the operations are not the most efficient. And then a broker who has access to multiple products. Dive into the differences and how is it different for the consumer working with a bank versus a broker? Because a lot of people think, and I think this is a misconception, they're like, oh, I work with a broker. The broker's got to get paid, so I got to pay him more to work with that broker.
And he's going to get the same loan product from the big bank anyways.
He can go to other lenders, but I got to pay that broker. But that's not really the case, right? I mean,
the difference is anytime you have a broker relationship, you have a written compensation agreement your company does with that wholesale investor.
Yeah.
Everything you're paid X, right?
Yeah.
There's no difference whatsoever to the consumer aside from they're going to have to sign 2 sets of disclosures.
Okay.
Per compliance, they're going to sign the broker disclosure by the end wholesale investor, and then they're going to sign whoever the lender is that's brokering to that institution. But one of the biggest misconceptions is people like, oh, you got a broker, they can shop it out and all these different rates. Well, looking at our capital markets division and our relationships with all these different investors in-house, we bank 80% of all of our deals. And the only reason we don't do the other 20 is the short-term rental side of things. Very unique market, but now we have some in-house programs. But we negotiate such aggressive terms on the inside where the broker side, they have aggressive terms, but a lot of the broker programs are aggressive programs. So it's kind of like you need them both, but at the end of the day, there's no negative or positive to the consumer. It's
going one way or the other.
It's the same, you're going to still pay a lender fee. You're still going to pay. It's not like, oh, if the consumer goes to the broker, they're going to pay all this. Nothing is like that unless, people charge junk fees, and there is that going on out there.
Yeah.
But at the end of the day, it's kind of the user experience, the consumer experience.
Right.
You're doing 2 sets. Usually the broker side of things, a little bit more archaic in the systems and, the processes and speed.
Right.
But, we have certain brokers in-house that will do 20-day closes.
Yeah.
So, it's really not a huge difference.
Okay. Interesting.
Because a lot of people think, oh, I go into, if I go to this wholesale broker and then I go directly to this, I cut the middleman out. I mean, 99% of the time, the pricing is the exact same.
Yeah. Yep.
But that's kind of the short of it.
Okay. Now I got to dive into one of the great mysteries of the world.
Yeah.
How do mortgage brokers get paid?
Basically, we get paid. You set up a compensation agreement, and everybody has their own compensation agreement. 1099 in mortgage brokers kind of been a thing of the past. I think it's been illegal since 2009. There are a lot of people that still do it.
Right.
But essentially, I take, no matter what deal I close, I make a certain percentage.
Okay.
And for my particular compensation, I have a cap. And what that does is anything over that cap, my pricing is super, super aggressive. I want to hit base hits all day long. You throw me into the jumbo realm, nasty.
Yeah.
But in Hawaii, your conforming loan limit now is, we didn't even touch on that.
Yeah, it's like 125 now, right?
1185.
Yeah.
So 1185, it went up. It's just under 800 on the mainland.
Yeah.
But I would much rather be super aggressive and hit base hits all day long than try to hit a grand slam every other week. So no matter what, the percentage is always going to be the same on how I get paid.
Okay. Makes sense. And that's in conforming versus jumbo. And
It's all, there's all, because it has to be the same comp or it's kind of against the Dodd-Frank Act.
Right.
But, broker is a little bit lower of a yield because there's not as much yield on the back end. So it's just.
Yeah.
But no, that's kind of the old mystery because people are like, but you used to be able to see on broker deals how much people made because they have to publish it.
Right? It used to be on the statement, right?
Yeah.
Not anymore, though, yeah?
They do it, but they kind of blend out the lender fee as a lender credit, and you just got to do a little simple math.
Yeah.
But that's the thing. People don't, they always ask. And you want to explain it to the client because if they feel like, if they understand it, then it's like, because a lot of them are like, well, don't we pay you? It's like, no,
exactly, right.
No, you don't have to pay us.
Or they think it's like a fee they're getting charged on top of the loan, or
That's like when people come and they're like, oh, I'm shopping around rates and fees, and really the only fee you look at is a lender fee, right?
Yeah.
Everything else is third party.
Right.
You got to look at rate and lender fee.
Yeah.
And it's like I've had so many times where if somebody wants a buyer's quote up front, I get it directly from whoever's going to handle title and to a T, whether if it's a condo, I've got transfer fees in there, to a T.
Yeah.
But a lot of other people forget all that stuff. And it's like, well, their costs are way lower. Well, no, because once you get into the deal, you're going to see these are real costs.
Right.
So, but
everyone's got to charge those,
And at the end of the day, it's, you want to get your client a super aggressive rate. But listen, we wouldn't be crushing it for this long if we're giving out 9-10% rates. Like, rate is super, super important.
For sure.
It's not the most important thing in a transaction.
Right.
Because if you don't get to the finish line, if you don't negotiate with the right team and the right lender, you may never get the deal. Like, there's so many things that go into rate is important. Don't get me wrong, but
it's not everything.
You want to get to the finish line.
Yeah. Efficiently, without a bunch of hassle.
Yeah, and people are like, oh, this pre-approval. Like, they even pull your credit. There's people out there that are stamping stuff. It's like...
That's the thing. It's not a standardized industry, I feel like, where, some people run it real loose and some people run it real tight. I mean, just
they didn't pull your credit.
Business.
Oh, no, they haven't asked for your year-end pay stubs. No, I'm like, what are they? Yeah, I was like, what are you? Well, and at the end of the day, in our industry, you get a buyer in there, and a lot of these, other people out there will just tell the buyer whatever. Oh, like this came up, now we need to do this, or we need to, and once you get them in the door, but I like to be honest up front because that business model seemed to be working for me.
For sure.
Yeah.
And, I like to sleep at night.
Yeah, exactly. Well, I think huge wealth information here, Brady. Thanks for coming out, man. Let's wrap it up with like one piece of advice you'd give consumers in today's market. Like what should they just know and think about if on whether they're going to transact or just anything, right?
Get pre-approved.
Yeah.
Because I have so many agents and buyers. Hey, run the numbers here. Run the numbers here. Hey, what does this look like? What is it? It's like, have you been pre-approved? No. Like, I don't want to be rude, but if I'm quoting you grade A terms, but you got a 640 FICO and you're not even going to qualify.
Yeah.
And I've had to listen, I don't want to educate agents, but you all want to win, right?
Yeah, right.
And it's like, get them pre-approved. We do a soft pull. We're not even dinging their credit. Get them pre-approved by a banker that knows what they're going to do and knows what they're doing and has a track record. I don't care if it's me. I don't care who it is. I don't want to beg anybody for business, but set them up for success.
Yeah.
Because then your work, guys, is a lot easier.
Oh, yeah.
A lot easier.
Oh, yeah.
And it's, a lot of people are like, oh, we're not ready yet. Well, okay, well, I can't drive around, the west side and, view so many. It's like it takes 5 minutes to do the app. Everybody's customized needs list is different. Dude, anybody that's organized, I don't care if you have 10 corporations or 50 properties, we can pre-approve you in a day.
Yeah.
Your shopping's going to be a
impressive.
lot more fun.
That's impressive.
Love it.
Love it. Words of wisdom.
Hey, I appreciate it, gents.
Yeah.
Brady Spangler.
I'm gonna be honest on this first podcast ever, man. I feel
You did great.
feel like it's kind of it's movie starish in here, man.
Once it starts flowing, man, it was good. It was good. Well, yeah, thanks for coming out. I'm sure we'll be doing another one with you.
Dude.
And we had fun.
Yeah, let's go on the golf course.
Dude.
You been playing?
No. I'm gonna get back out there.
All right.
Yeah.
Start getting the reps in.
Dude, for sure.
No, Ryder's swing at the tourney, man. Guys hitting
He's
them well.
got a great swing.
Dude,
Hitting them well.
I told you he had an ace over the summer.
Oh, yeah.
Yeah.
But he's like, golfing's an Idaho
How old
sport,
is he
man.
now?
Eight.
He's
Well,
eight.
he just turned 9. Golfing's an
Dad a run
Idaho
for his
sport,
money.
summer sport, Dad. And I'm like, it's what? We live in Maui. You realize that, right? So,
Yeah.
Did your summer in Idaho?
Yep.
Yep. And
that's where he thinks he only golfs.
no way.
Yeah,
He-
he's
he-
in the
he's
club.
not-
Yeah, I mean, it's just here. It's
Oh, we got to get him out, man.
yeah. Well, it's theirs. Clubs
got a
don't
club,
leave your
you got a
car.
club. I
You
know,
know,
I
it's
know,
like
I
your
know, I
own
know.
car. And you
It's
drive in the
different.
car.
Too
and it's
Different
like,
experience.
Too
Yeah.
easy.
But yeah, no, and also if anything pops up like chat wise or like on any of these when you post,
Yeah.
loop me in and we'll get
sure. For sure.
real time answers to real questions.
Oh, yeah. No. Absolutely,
baby.
man.
Yeah, thanks for coming on.
Absolutely.
Thank you.
Yeah, we'll talk to you soon.